Okay, welcome to another episode of our weekly reviews. Today we are going to be reviewing Euro USD as seen. So we look at what happened during last week and what has been happening in the previous weeks. You understand? So remember we had this last week, this key level here, this key level right here. So we have this key level and we have that key level. So but when price did this, broke here and broke here, this is the liquidity resting below the key level, and we saw how price respected it, right? Price rejected from that point. So let's increase this for us to see what's playing out. So we see how price rejected from the key level. So price rejected, and once we saw the rejection, we know we ought to be on to something, right? So the next thing is to look for that a candle break, right, on the same weekly time frame. We're on the weekly time frame, right? So we saw a rejection on the weekly key level, or a reaction on the weekly key level resulting to a rejection, and then we also wait for the weekly candle to be broken. So now that happened that previous week. So once we saw that break, we know that price would want to come to the daily key level, because that's how we frame our setup: weekly, daily, 4 hours, then we enter. Weekly, daily, 4 hours, then we enter. So that's how we just do it. So weekly has been checked. We are waiting for daily to be checked. But then while we're waiting for daily to be checked, we have to still, because the daily has to check below the weekly, right? Just as it is. Weekly rejection, this is the line here. This yellow line marks the weekly rejection, and we ought to see the key level from the daily zone. And if you look closely, this is a liquidity resting below that daily key level inside the weekly key level. So while we're waiting for all this to happen, and because we know price is going to retrace downwards to that key level, take out the key level and tap on the daily key level, sorry, take out the liquidity and tap on the daily key level. So we are going to switch to 4 hours because we want to get that retracement entry, right? We want to get that retracement entry. So when we switch to 4 hours, we still observe what price is doing, right? Now price, after price cleared the weekly high, which is this, after price cleared the weekly high, now we are going to watch closely to see a break of candle structure, right? Price rejected on the candle. Let me make it bold for you to see. Price rejected on that candle. See the rejection down. Then price was just doing it until it broke that 4-hour candle. Once we saw the break of candle, we are now going to mark out our key levels on the 4 hours, because this is where we want price to react, break, then we enter, right? React, break, and enter. So we mark out this key level, but price did not get to here. Instead, price did this, went up, down, and broke this low. When price broke this low, now this is our next 4-hour high. This one price did not come, we delete it. Let me embolden this more for you. Now we mark out our reaction, 4-hour reaction level, which is this tip of, looks like an A shape, but it's the key level, right? That's our reaction point. We mark out the reaction point. Once price react, sorry, once price react, what we do is we wait for um, double break of candle. This is the first one, and this is the second one, right? This is the second one. And when we saw the break, we see that what happened here was a small liquidity sweep. Sorry, a small liquidity sweep here on the 4 hours. We saw a liquidity sweep here and a break of structure, right? Liquidity sweep and a break of structure. So what we do is, this is our order block. When we saw this, we waited for price to get to, we mark out our order block and waited for price to come there, but price did not come. Price did not come. Price did another break to give us a standard liquidity, which then validates this our order block for entry. Because remember, before you enter any market, there must be a liquidity resting just below or above a key level, right? So for us now, this is our liquidity that is resting above or below the key level, right? So once we mark our liquidity, then we just enter directly from that key level. So this is the key level right here. If I change it entirely to line chart, that's what you will see. So the liquidity resting below the key level, that is the closest to where the liquidity is resting, that is where we are going to enter from, right? So we enter from that zone, and we stop at this other zone just for safety. So this is where we stop. Let's go back to our candle. So once you enter, we target that um, remember that daily liquidity that price is retracing to before we get the continuation of the buys, right? So this is the liquidity we are now going to target on the daily time frame. That's that liquidity there. So we're supposed to target the liquidity, but me, I'm still targeting here because I expect price to come down to this place. But standard target should be here on the liquidity where price is going to react. So what we are expecting now to happen is next week we're expecting price to clear here, tap on the daily, probably reject, you understand, come and break the daily candle high, then we switch to 4 hours, then we enter from 4 hours reaction, and now where should be our target? Maybe that will be from next weekend, when I am explaining what has happened. Now do our first target will be here, right? Our first target should be here, this high. Now remember, since we are working with liquidity with weekly key levels, that is just our first target. Our next target, where is price coming from the weekly from the weekly what's it called, the weekly time frame. Price is coming from this place here. So we have weekly to weekly, right? Weekly to weekly, that's what we would be doing, weekly to weekly. So here will be our next target. Meanwhile, we can still be targeting all these weekly key levels as we go high. We target this one, we target this one. So you can even enter multiple entries and you keep on targeting all these weekly levels till we see where price will react from. But definitely we are getting a reaction from this zone or this zone, this zone or this zone, or even this zone, right? So we are expecting price to go all the way high to this zone, to this zone, or this zone. So that's what we are expecting for price to do. Probably um, in the coming months, this is what is just going to happen. So when we get that reaction from here, we'll now know what to do next. But price might also decide to go higher than this, but this is what we are targeting on a standard level. This is what we are targeting. So here would be better to stop our you know take our profit from here if we entered from that point that I pointed out for you. So this is what we're expecting. We're expecting the sales continuation of sales from next week opening of the market. Price would sell, then a very serious buy would now occur after multiple reactions and confirmations. So that's what we'll be expecting um, next week. So thank you for your time. This is a very short one, and I hope you understand. In addition, I might want to add another one, but I'll stop here for now and go and um, do your own research and understand more on how to read the market on a personal level. This is a video just to guide you, to show you what to expect from the market. Do your own research and remain profitable. Thank you very much.